From our previous video, we looked at how we can introduce ICT to trade a very simple strategy based on the open low high close, open high close, open high low close, using the daily candles, this and this. We looked at these three examples and we saw how impressive the strategy was if we introduced a very simple entry model called the ICT 2022 model. Now we want to advance things a bit further, and this time we are going to, let me mark this open. This was Wednesday open. Wednesday new day open. We will also mark Thursday new day open. Thursday new day open, and then Friday new day open. So we have several. In our basic entry model, we said wait for the candle to open. As it forms the high, place a sell stop here. Once the sell stop is triggered, place a stop loss above that and wait until the day closes and take your profit or close the trade. Same thing to Thursday. We also looked at the basic entry model. As the day is forming the high of the day, place a sell stop right here. As the sell stop is triggered, place a stop loss there and take your profit at the end of the day. Same thing for the Friday candle. Now we introduced in a previous video. I think if you watch these videos in a row, you will understand how we are moving up the scale or up the ladder to make these things better. So in our previous model, we introduced ICT 2022 model. Yeah, 5 minutes. We introduced the ICT 2022 model to refine our entries for these 3 days. We first of all looked at the Wednesday first, and then we said what we are going to do with that. We will introduce ICT 2022 model, where as the new day opens and forms the high of the day, we look for liquidity sweep or liquidity rate. Then the second thing we look for is market structure shift, and the third thing we look for is PD arrays for entries. And these PD arrays, we said we will have fair value gaps, inverted fair value gaps, and breaker blocks. Yes. So looking at the Wednesday open, now we want to introduce the advanced entry model using premium discount and engulfing candles of key areas or these PD arrays. So this is Wednesday opens right here at Wednesday midnight on this candle. Then we have an impulsive move to the upside. As that is happening, this liquidity sweep happened, and then we waited for market structure shift, and let me change the colors of these ones, red, yellow, let me use that orange. So market structure, liquidity sweep, and then we have market structure shift, and then this to this side, and then we had this inverted fair value gap here, and we noticed price was reacting off this fair value gap. So this is a 5-minute FVG. Now, based on this model alone, we take our entry at the retest of this fair value gap or inverted fair value gap. This was inverted fair value gap. Stop loss right above there, and take profit risk to reward ratio of 3. And if you look at that, we hit our take profit. So how is it going to advance our entries? How are we going to advance our entries? Now this one is very for scalpers or for those who want quick high risk to reward with tight stop losses returns. Now look at this. We have this fair value gap. We have this engulfing candle from this fair value gap. If you do that, now we want to introduce something. You want to introduce premium discounts of these PD arrays. PD stands for premium discounts, but now we are taking it, we are adding another layer of PD arrays for entries, final entries, or tighter stop losses. And this is what happens here. Now we have this engulfing candle of this 5-minute fair value gap. This engulfing candle will give us a premium and a discount, and because we are looking for sales, we are only going to take buys or sells from this area, and we only take sales from the premium of this engulfing candle. So if I mark this premium, it is the upper side of this area, right? Giving it a different color, like that. So this is the premium of this engulfing candle. Now what we are going to do is wait for price to tap into this premium. As price comes into this premium, you take an entry right here, stop loss right above this swing high, and we want 1 to 4. This time you can take 1 to 4, 1 to 5, or even 1 to 10. This one got to 1 to 5, I think, 1 to 4, and then it reversed. Now looking at how long this trade took a very short time, from 340 to 555, and that was a quick entry into this trade. Now I said you can take up to 10 RR. This one did not give that 10 RR, assuming you took partials and price reverse to take your stop loss or break even, and that is very much okay. Now the second time it does this again, price came back to this premium, this fair value gap, and it gives us another engulfing candle of this area. This engulfing candle of this area. Now if you take this again, very simple entry model, and you target another 1 to 4 or 1 to 5. This one gave us a 1 to 4. So 1 to 4s are giving us good returns. Once it gets 1 to 4, you are maybe targeting, you are taking your partials and setting your stop loss to break even for good entries. So that is the second opportunity. If you took these two opportunities, you have a total of 8. If you are risking 1%, you will now have a total of 8% growth within Wednesday, even before midday, right? Now, let us look at the next opportunity. This time, price disrespected of this, closing above it and then going lower. But if you are smart enough, you will know this is an impulsive move to the downside. That meaning what we have here is an order block right here. So this order block is valid. If you do not want to use that order block, you can use this fair value gap. Tiny, but it is there, right? That fair value gap. You will see price reacting of it. And then you have these two engulfing candles, this engulfing candle of it. Take a trade at the equilibrium of this premium discount. Stop loss right above this area, and you target your 1 to 4, 1 to 5, or even 1 to 6. That gave us a 1 to, around 1 to 6. 1 to 4 is good, 1 to 5 is good, right? Or 1 to 6. So a constant of 1 to 4, 1 to 5, or 1 to 6. And if you wanted to target higher returns, this was a good opportunity. This time maybe you can use the market structure to target higher returns. And this was 1 to 15R. Okay, assuming you don't want to use that tiny fair value gap right there, or you missed it, your eyes didn't see it, and price came to it and reacted of it. What else would we have done? We have price making an impulsive move to the upside into this fair value gap or order block, and then another impulsive move to the downside. What did it do? It left us with an fair value gap. You have several opportunities here. Fair value gap, this inverted fair value gap right here, right? And this massive fair value gap right here. Let us start with the inverted fair value gap. Price comes into this fair value gap. Remember, we are forming the high of the day in this zone, so we are looking for sales. Immediately we have a massive or a bearish engulfing candle of this inverted fair value gap. What do? We mark the equilibrium of the candle that forms that engulfing. Equilibrium of this engulfing candle. Take your entries there at the retest of this equilibrium. Stop loss right above it. And you want your 1 to 4R right there. If you are smart, you will take even higher, right? Maybe a 10, or using market structure to take that profit. Market structure for these lows, these are 7R, or even a 10, or even what was this? This was 14.5R. Okay, so that is an opportunity you would have taken. Assuming you missed that, but you have this inversion here within this area that is forming our high. right? This was again another opportunity. This inverted, no, this is a fair value gap now, not an inversion. This is just a fair value gap formed. Price comes into it. You wait for the engulfing candles off into from this area, and you want to mark your 50% of these candles. And what do? You want to take a trade at the equilibrium of this area. Sorry. Stop loss right above those highs and take profit 1 to 4. Very quick returns right there. Or market structure, using market structure for take profits. These equal lows will give you 1 to 6. This low here will give you 1 to 8. And this low here, let us see how crazy that goes. It will give you 1 to 16.5. And maybe you can become a bit more crazier. These lows here will give you a 1 to 31.51 R. And this is for those who are crazy about taking these entries, which is not bad. So this was right there, this fair value gap entry. So if we looked at this fair value gap entry, we had several other opportunities. You see where price is reacting off of, again, same area, inverted fair value gap. Or if you don't want that, we had very interesting opportunities happening. Liquidity sweep, market structure shift, right there. Then we form another fair value gap, right? And this fair value gap, we have an engulfing of it. And then we have several PD arrays supporting our price at this point, right? So this one did not get to our equilibrium. You can leave that because, and then we have this again inverted fair value gap coming into this, dropping lower, giving us this again. You want to check if you would have taken this trade. You did not take the trade because it did not retest at this point. That is how you can make use of your equilibrium speedy arrays to take high quality trades, sharper entries, and high risk reward ratios. This was for Wednesday. Let's go to Thursday and see what's happening there. Thursday, where did Thursday? Here is Thursday open. Where did it open? I want to think it is at this candle. So this is Thursday open, midnight. This candle here, right? So we have an impulsive move to the upside. Liquidity sweep, market structure shift, and we have this order block. We do not have clearly defined fair value gaps from this area, but because we have a momentous move for the upside, we assume this is forming the high of this day, which is Thursday. So we are looking for sales. Now we come here, we only have this clearly defined breaker block. We want to take our entries of this breaker block, right? So price comes, trades lower, and comes back in. This right here was a good engulfing candle of this breaker. We can use it and see, check if we could have taken an entry of this area, and yes, there was an opportunity right at this equilibrium. We had that entry, stop loss right above this high, and take profit. As I was saying, you can take very high risk to reward, 1 to 4, 1 to 5, 1 to 10. Let us see where this got us. So these targeting these equal lows, you have your 1 to 12 risk to reward ratio. Not bad. Very impressive results. And this is still Thursday. Entry taken at around 2:10, 2:15 in the morning, and at 9:50, not 3, at 9:50, 9:20 a.m. our take profit was hit, giving us a 12.37 R. Now, that was not the only opportunity existing here. This was the first engulfing candle off. Assuming you missed that, will we have had another opportunity? Let's check if this gave us something. Right, you see that entry at this equilibrium, stop loss right above this area, very tight stop losses, you can see, and we want that 1 to 7, 1 to 8, 1 to 10 R, or using market structure to take our profits. These equal lows here, 12.83 R. And if you are crazy enough, you can hold this trade until the close of the day. Where did the day close? Thursday, Friday. Okay, it closed a bit higher, right? I think around this point, which was 9.7 R. If you have good trade management skills, you would have taken all these profits up to this point, 19.2 R, right? So that was Thursday's opportunities. Let's check if Friday gave us any opportunity. Friday, where did Friday open? Opens here, right here. Top of that candle. What do we have? We have liquidity sweep, and another liquidity sweep, tiny liquidity sweep at the top. We have our market structure shift, and this gives us several PD arrays. So we have breaker block. That breaker block we have this inverted fair value gap. What else do we have? We have this fair value gap. 3 PD arrays in an area of interest, which is this area here. So this one, let us see if we got any meaningful opportunities. I want to say we are afraid not. If you're waiting for these high risk to reward ratios, you would have missed out on possible entries. That's why we advise you can take the first entry based off this ICT 2022 model. You can take your 1 to 4, right? But assuming that 1 to 3 or 1 to 4, but assuming an opportunity appears for taking entries at the equilibrium of PD arrays of engulfing candles that are coming out of these fair value gaps and breaker blocks, you take that entry as well. You have this as your partial and the other trade as another trade going on until you get to your take profit. Trying to check if we have any nothing meaningful. Maybe we could have used this inverted fair value gap. Let me just delete everything else. And then we have this candle coming out of it, and then we take our entries at this equilibrium, stop loss there, and you want your 1 to 10R, or using market structure for take profits, you can take this. All this happened on Friday from 2:30 a.m. to 8:20 a.m. in the morning. You have your 10R. Remember, you took your first trade based off ICT 2022 model. You also probably hit your 1 to 3R at that point. So those are the entries based on premium discounts or equilibriums of engulfing candles coming out of PD arrays, and that gives you very tight stop losses and very good entries. You can give it a try, back test it and forward test it until it makes sense to you. That's it for this video. Have a nice day. Till next time.